Hello everyone and a very warm welcome to this week's cryptocurrency update for Friday, February the 28th, 2025. It is the last day of the month and today we're going to cover Bitcoin and Ethereum as well as Riot. As it looks like for Bitcoin, we are hammering out the fourth wave low, and for Ethereum, we are hammering out a third wave low. And Ethereum has really been a troubled child, I would say, as its chart continuously requires updates. And that's what we're going to do, because please remember that all we can do is anticipate, monitor, and adjust if necessary. I must say it's been quite frustrating for Ethereum, but I think we are getting close to figuring out what is exactly going on. Whereas Bitcoin remains on track. Indeed, the breakout did not happen. We had 5 basing patterns since the low of 2022. And the 6th basing pattern was where Bitcoin decided, nope, I'm not going to base anymore. I'm going to break down. And we knew that if we would see a breakdown below, say, 92,000 and especially 89,000, that Bitcoin could reach as low as 70,000. And I think today we reached as low as about 79,000. Let me quickly check here on my phone what we got today, and we have a nice bullish reversal candle so far. We got as low as 78,411. So I think we can start making some nice calculations for upside targets. So we believe that Bitcoin is either in this fourth wave here or in this fourth wave here. It depends a little bit. So we could do one rally, a drop, and another rally, okay? Or all we got is indeed this last fourth wave and then a final hip hip hurrah, as we still expect, based on the 4 phases of Bitcoin, a top later this year. How would that work if we have a final low here? Then we would see probably a 1 to 2 month rally for a wave 1. We would see a 2-3 month rally for wave 2, a 1 to 2 month decline, and another 2-3 months. So if we're going to top somewhere late November and we're going to do 2 months for a wave 1, 1 month for wave 2, that brings us already into late May, and then June, July, maybe August will rally, and then September down, and then October, November up. Okay, that could be a timeline, but not sure. What we do know for now is that downside targets have been reached, especially for Bitcoin, and I'll show you also for Ethereum using a new wave count with a impulse lower for a C wave of a larger fourth wave. Again, we anticipate, we monitor, and we adjust. In this case, we anticipated a basing pattern based on previous 5 basing patterns. And if history shows nothing but basing, we must anticipate also that the future will be basing, contingent on holding, of course, above the basing patterns low. In this case, 89 to 92,000 for Bitcoin. I can't stress it often enough. We cannot predict the future. Okay, all we can do is go by data. That is what we use. Previous patterns, historical patterns, Elliott wave, where are we in relationship to moving averages, that kind of good stuff. So let's have a look at the charts. We're going to start here with Ethereum. This is the daily chart. And as you can see, I have entirely adjusted the wave count. The wave D, however, is still the same. The wave 4 is also the same on the daily chart. But I have now a 1 and a 2, a 1 and a 2. And then the February low was 3, then a complex A, B, C for a wave 4. And today we completed most likely wave 5 of wave 3. We should bounce back ideally to resistance at around 2750, and then a final decline for the wave 5 of E. Okay, if not, then the wave 4 low is today. Then we had 3 waves lower. Okay. But C waves and E waves tend to be 5 waves. But we have to always acknowledge that if we do see higher prices, that of course the 4th wave is already in place. I don't have any warning levels for the bears on this chart, but I would say anything that goes back above the 200-day moving average and the Ichimoku cloud is a very good sign, because when that happens, cryptocurrencies tend to run pretty hard, as you can see here in November last year. So when we use a monthly chart, you can see here, this is still our triangle fourth wave with this wave E of 4 underway. We're getting almost oversold on the monthly time frame. Yes, we had lots of negative divergences. And here we count this as a 1 and a 2 and a 3 and a 4 and a subdividing wave 5. Okay, so then we topped here in 2022 for 3. We have a triangular wave 4 and then a wave 5. All right, that's kind of what we are looking at for now. However, I do want to point out a alternative, and that is that we are in some form or fashion a flat wave 4. Here I have labeled the 2021 high as a cycle 3. Primary 3, cycle 3, it's a bit potato, potato. And then we have wave A lower, 3 waves down, as you can see here. Okay, we had 3 waves lower, and then we had 3 waves back up. So A, B, C, and then we have A, B, C for a wave B, and we are now in a C wave lower. Now, the issue with flat waves is we don't know what type we'll get. A regular flat is where A equals B equals C. We can have an irregular flat where B is larger than wave A. We can then have a C wave that is shorter than wave A, that's running, or longer, which is expanded. So what we got so far is a B wave, which is shorter than wave A. So that sounds like a regular flat, a little bit above the 76.4% retrace, which qualifies as a flat, because anything that it stays below 76.4 is better counted as a zigzag. And now we should be in a final C wave lower. And as you can see, the current price action, since this B wave high here, A, B, C lower, A, B, C higher, and we should now be in a impulse, 1, 2, 1, 2, 3, 4, 3, 4, 5. Now, since I labeled this rally here as a cycle 3 instead of a primary 3, and the pending low as a cycle 4 instead of a major 4 or a primary 4, it doesn't really matter. The wave degree is of course also one higher than what I showed you using the daily chart. But it's also again potato potato. As you can see, we're right at the 161.8, which is a classic third wave target. We should bounce back to that 2700 level, something like this, and then a final step lower. However, it's not necessary, okay? And again, we don't know how much this fifth wave is going to extend. That we don't know. If we get a simple standard fifth wave, we should bottom around 1600 to 1400. And then we'll have a running flat where this C wave does not end where the A wave ended. You can see that here, okay? Which is fine. Then we just had a running flat. Can we have a expanded flat? Sure, if this fifth wave extend. However, we're currently following so far a standard Fibonacci-based impulse pattern, 1, 2, 1, 2, 3, 4, 3, 4, 5. So that's what we're going to go by. This is the alternative, and then after 4, we still get 5, okay? Similarly, here, sorry, that's what you get when you read something else on the screen. Also here, we still expect a wave 5 to come. And this indeed is 3 waves lower, A, B, A, B, A, B, C. This is all very complex, okay? But in the end, this still suggests higher prices. Can we go back to 100? Sure we can. Again, it depends on how much this fifth of the C wave is going to extend. We don't know yet how much it will extend, but we're going to use standard Fibonacci-based impulse patterns, and then all we get is around 1600 to 1400 for Ethereum. Okay, so I think we're starting to get close in figuring out what's going on with Ethereum. So this is now our preferred wave count that this ongoing fourth wave needs to subdivide a little bit more, a 4 and a 5, contingent on holding, I would say, below the 200-day simple moving average. All right, let's move on to the big boy, the 800-pound gorilla in the room, Bitcoin. Bitcoin dipped below the 200-day simple moving average, but is so far trying to close back above it. We have a few more hours left in the day, and as long as Bitcoin holds above 80,011 and 41 cents, the bull market continues based on historical evidence, and I'll show you that in a moment. What we do want to point out is, of course, a very oversold daily RSI 5. These are conditions. The last time this oversold was August 2024. And also here, Bitcoin hammered out an important low and then rallied in 5 waves higher for this green wave 3. Okay, we've bottomed so far in the ideal C wave of the fourth wave target zone. And we've also bottomed around the 50% retrace, which seems to be more typical for fourth waves for Bitcoin than the normal 23.6 to 38.2% level that you see for the stock market. Okay, so this all looks good. So contingent on holding, of course, above today's high, I think we can move much higher. How high? Let's use some of the weekly charts. As you can see here, first and foremost, these blue horizontal arrows. The August low was a fourth wave, and also all the way back here in 2021, this was also a fourth wave. Unfortunately, the Black Wave 4 label is gone, but let me add that there, Black Wave 4. And you see here, 50 to 62% retrace, 50 to 62% retrace. And if we look here again, 50 to 62% retrace. Now, if I use a slightly different retrace level, you can see here that we are right here in the 38.2 to 23.6% retrace zone as well, going back all the way here to the 2023 low. All right. But if I ratchet it all the way up here, you'll see we'll get closer to the 50 to 61.8%. It's fine. So far, so good. And again, we're extremely oversold on the weekly RSI 5 that in previous bull markets really gave good risk reward trades. Okay, same here in 2021, same here in 2024. Again, I do want to point out that we have positive correlation between the MACD and price, which often means that we'll see a higher high and then in price, a lower high in the MACD, ideally, just as we saw here between 2021 and almost 2022. Okay, so we're expecting the MACD to put in a lower high and of course price put in a higher high. Then the question is that all of the bull or are we going to see one more 4 and 5? Okay, now, if we go to the monthly chart, it suggests we'll only see one more higher high. Using monthly candles, we have a 1, 2, 1, 2, 3, 4, 3, 4, and then 5. Those previous pullbacks that I showed you were somewhere around 40 to 56%. The current pullback was 38%. So it's quite normal for Ethereum to pull back that much in its mature bull market phase, which is the last bullish phase before the 1-year bear market kicks in. It's quite normal and it shakes out all the weekends. And if we then look here at how much Bitcoin gained afterwards, here in 2017 it was almost 600%, a lot. In 2021 it was about 140%. And if we compare it to what we saw here in 2024, it's about 120%. So we can say on average a gain of about 130%. Now Bitcoin dipped to as low as 78,000. And if you would multiply 78,000, let me see if I can find my calculator, then we can get a nice target zone. So let's take an average of about 130%. We can target 179,800, so around 180,000, which matches really well with a little bit of the lower end of the ideal Fibonacci-based extension target zone. And that could be all of 5 of 5. And that should happen somewhere late this year. If we top out at that level mid this year, then I expect another 4-5 sequence as we show here. If we top out all the way in November next year or this year, then we can expect, of course, what we have on the monthly chart. This is work from Titan of Crypto. And it shows that as long as Bitcoin closes above a 38.2% retrace, which is 80,011 and 41 cents, the bull continues. Since 2013, all bears ended on a monthly close below the 38.2% retrace. So far, so good. I believe Bitcoin is at 84,000 and today is the last day of the month. So we must assume that the bull continues. Here is another chart from Super Bitcoin. It is going to the Wyckoff reaccumulation pattern. And we've done just that. So we have now our next bull run to expect. Looks really good. followed it really nice, and we should now be in the starting gate of the next bull run. So I'm showing this because we want to have different pattern analysis to confirm the thesis, confirm the Elliott wave count, etc. So far, so good. And then last but not least, CryptoCon's target zones based on Fibonacci extensions, where he was looking for example, a rally to 166,754, which matches really well with what we just calculated, as well as what we had on the monthly chart of 164,000. Now, he thought we would reach that in March 2025, but it says it maybe takes a bit longer this time around, because the cycle isn't over and the target is not going anywhere. Okay, this is all based on previous patterns. Last but not least, Riot. I want to cover Riot because we were looking for a low at around 858, and so far we got 852. That is exactly the 76.4% retrace of the bull run that started in September and topped in November. There we had a nice 1 2 1 2 3 4 3 4 setup. 1 2 1 2 3 4 3 4 5. The correction we've had was a double zigzag, I would say. So we had A, B, C, A, B, C, A, B, C. Very complex at the 76.4, and it held absolutely magically. As you can see, we have here C is A at 852, C is A at 858. And if we can now start moving back above, especially the February high, then I think we have a very nice low in place. And where are we going to look then next? Then we have to zoom out, and this, I believe, is the weekly chart with the WXY corrective pattern. You can see clearly the impulse higher. Why is this clearly? Because down weeks are second and fourth weeks. Okay, so we have 1, 2, 3, 4, 5. Then we have the ABC, ABC. Again, right here at the ideal Fibonacci-based retrace of 76.4. So as long as then today's low holds, we can look forward for a third wave to ideally about 24.1. It comes very close to the C is A target zone, assuming this is wave A, this is wave B, and then this is wave C. However, we can extend all the way up to 33.4 for a wave 3. Okay, to be determined. So first upside target is now at least 24. Okay. Potentially as high as 27, 28, or even 34, but we'll take it step by step. And of course, Riot needs to break above this downtrend line there that has been in place ever since the top in 2023. But for now, this looks really complete. We've done what we need to do. So I really want to see today's low holds. And if the stock market has bottomed, if Bitcoin has bottomed, that should be a very good sign that Riot has bottomed as well. If we break below 625 at any time going forward, this whole Elliott wave count falls apart. Again, we're not predicting the future. We're trying to follow along. And the price section we've had since October, November last year has been anything but easy to understand. And that's what you get when you have these double patterns, an ABC followed by another ABC. So you kind of go a WXY. Very complex, but this all still looks corrective to me. This looks corrective. This here looks corrective. This looks like an impulse. And this looks like an impulse. Okay, so I expect at least this to materialize. All right, that's all that we have for this week. If you have any questions, please contact me. Please let me know. Again, we've gone over several different lines of evidence. We have our Elliott wave. We've looked at previous patterns. We looked at the four phases. We've looked at the 38.2% retrace on a monthly scale. We've looked at the Wyckoff reaccumulation pattern. We've looked at Fibonacci extensions, and all point the same way, and that is that most likely this fourth wave has completed. The only question that remains, are we going to see one last fifth wave, or are we going to see a fifth for a third wave, a larger 4, and then one more 5? That's the only question that's left. But otherwise than that, the current decline has been nothing but normal within a larger bull run. Take care, trade safe, and I'll see you all next week.